Hello and welcome to our panel today. We're going to be discussing the topic of blockchain for public finance management. It's a fascinating topic. We've just published a report in collaboration with EY on the topic. So I hope you'll have a look at that. We're going to be diving into some of those topics just now with a panel of experts. So we have on your screen at the moment Anthony Julies, who's a former Deputy Director, Assets and Liability Management from the National Treasury of South Africa. And say hello.
Hello, hi, thank you.
And Udabir Sarandas, Assistant Director and Advisor for the Monetary and Capital Markets Department at the IMF.
Hi, hello everybody.
Thanks very much, guys. We will also be joined by Leslie Masdorp of the New Development Bank, CFO of the New Development Bank. He is running a couple of minutes late, as is Mark McDonald, who is Global Lead for Public Finance Management at EY. Excuse me. So I'll just start off and tell you a little bit about the report. As I say, public finance management, it's an area that new technology has some really interesting potential applications for improving, particularly regarding providing better oversight over how money is used. Over the course of our research for the paper, what we discovered is that a lot of the central budgetary authorities that allocate budget have a limited perspective on how the money is actually used. And what we're examining is the benefits of improving that. And now we're joined by Mark McDonald, as I said, Global Lead for Public Finance Management at EY. Mark, not to drop you in it with no warm-up, but would you like to just give a little introduction on where the topic comes from and your involvement with it?
Yeah, very happy to do so, Lewis, and apologies for being a minute late. It sent me to a Teams meeting, not a Zoom meeting, but anyway, there we are. Technology at play. Very, very happy and very interested, obviously, to be here this morning or this afternoon, depending on where you are, this evening, depending on where you are. My name is Mark McDonald. My role with EY includes being the global leader for our public finance management space, which is essentially all things public budgeting. And so we come to this issue very much through the lens of the responsibilities and the obligations of governments as financial actors, more from a fiscal policy perspective than anything else, because public budgets are essentially the way that governments prioritize the allocation, the collection, and the expenditure of public resources for a purpose. And one of the things that many jurisdictions around the world have had difficulty with for a very long period of time is the ability to collect and connect the complexity of their delivery systems in real time to be able to establish the necessary integrated understanding of what we spend our money on, how we spend it, and what is the social result and return that is intended and realized, or perhaps not, and how can we enhance the necessary information basis to enhance our capabilities in that public finance management realm. And long story short, we think that the advent of things like blockchain-enabled solutions can actually significantly enhance that capability, and by extension, not only improve, say, the administrative efficiency of the way that public resources are managed, but actually significantly improve the effectiveness. And that's essentially what we're all about. So one of the things that the firm does is we invest in the exploration of these sorts of issues, the examination of these sorts of issues. And so we're very happy to have been support behind the scenes, sponsorship, if you will, for what I think is the very provocative and very excellent paper that OMFIF, Lewis, and your team have provided for discussion this morning. So we are here just as you are, and hopefully the audience as well, to examine and to discuss and to explore and to hopefully enhance our understanding of the way that these sorts of technologies can be matched to very real world issues that leaders, hopefully like yourselves, have been trying to address for a long period of time. So Lewis, back to you.
Sure, fantastic. Thank you, Mark. I should say we'll have a discussion for the next half hour or so, 40 minutes maybe, and then open up for questions. So there should be a chat box for you guys for the audience to submit questions that will appear for us, and we can address those a little later on. So with that, I think if I could come to you first, Anthony, I'd be interested in your experience in public finance management. Can you tell us a little bit about your background there and perhaps some of the problems that you might have experienced? Mark mentioned, I guess there's broadly two categories. There's administrative inefficiencies and then an inability to allocate most efficiently. So yeah, with that in mind, can you give us your thoughts?
No, thank you. Thanks, Lewis. My background, I've been with the National Treasury for close to 25 years. I've been in and out. I've been seconded to the African Development Bank, where I've served on the board there. I served the last 5 years of my civil public service career from 2014 to 2019 as the Deputy Director General of the Assets and Liability Management Division. Essentially looking at a sovereign balance sheet. And Udiba, we just had a discussion around looking at how do you assess the sovereign risk and what factors is it that you then take care of and assess. So that is essentially what I've been doing very directly as the head of Asset and Liability Management. And I'm currently a student. I'm doing research. I'm a doctoral student at the University of London. And I'm researching essentially what I've identified as some of these problems and solutions that need to be found in having effective public finance allocations, looking at how money, public funding should be serving society, because public finance essentially is about the relationship between the state and society. And the problems that we generally, not just in South Africa, where I have the direct experience, is that there is public finance is not currently reconciling competing and conflicting interests that you find within society. Public finance is not really achieving socioeconomic transformation, which is an objective of public administration. Public finance is not really, my experience, applying the law in a detailed and in a systematic manner in order to have the desired outcomes. And public finance is not really, the way it's being managed, from my experience, collecting relevant data, analyzing this data for effective public finance decision-making. And I can give the empirical evidence. We have poverty at its highest levels. We have inequality in South Africa at its highest levels globally. We have unemployment in South Africa globally at the highest level, when we have, over the past, since the global financial crisis in 2008, we've allocated significantly huge allocations, public finance. In fact, we adopted a counter-cyclical fiscal policy after the crisis in order to boost infrastructure. And we have not seen any of the impact of those huge allocations, whether it is guarantees given to state-owned entities or just allocations, public infrastructure. We have not seen outcomes that are desirable to society. So that would be my introduction. Thanks.
Thank you, Anthony. So it's a really interesting point. I appreciate I might be asking for a summary of your doctoral thesis here, but if we can just, what would you say is holding back, what would you say is the big limiting factor? And I think specifically today we're talking about information management systems. So can you, with maybe that's just a section of your doctoral thesis rather than the whole thing, but what is the particular deficit in information management?
Having access to the relevant information and having proper oversight. And you don't need to decentralize this information. All you need to do is make it available to, let's say, Parliament, who have a particular responsibility over public finances, in order to measure the right things. It's important that relevant data is collected, and it's not that it's not available. That is where the sovereign risk rating exercise modeling work that I did becomes relevant. It's available. It has to be shared by everyone so that it can also provide appropriate accountability and transparency in order to have desired effect in the implementation to society, because it is about the state's role in benefiting society, having this information data available.
I think we're just about to be joined by Leslie. Hi, Leslie. Thanks for making it. Pleasure to have you here.
Apologies for being late. Good afternoon, everyone.
Not to worry. Thanks very much for coming.
Hi, Leslie.
If I could come to you, Odebir, Anthony was talking specifically about the situation in South Africa. Can you talk a little bit perhaps about how these problems tend to vary between different countries? And Mark, you might want to weigh in on that as well.
Yeah, thanks. Look, before I start, let me compliment OMFIF with EY for this report. I think it's extremely timely. And one more example of OMFIF coming up with excellent public goods, which are well targeted. So all compliments on that one.
Thank you.
I mean, this is an interesting question, and I perhaps would like to answer this more from an emerging market, developing country, low-income country angle, because I think that's where the marginal benefit of blockchain type of technology is going to be extremely high, strong, and effective. In terms of how do we see by way of a distribution of issues, I think there are some common factors that one has to recognize. I don't think anybody will ever take away the fact that technology will not make a difference. It will. Of course, it all depends upon how it gets used. But in these countries, there are 4 or 5 things that come up in different shades and different degrees. So we talk a lot about data. I think we have to recognize in these systems, data quality is a problem. So while you can create blocks, the question will be, what is it that you're going to put in them? And I think there's a whole journey there that in many countries, they have to still traverse that. So data is one. The second is technical capacity. We find that to be a problem. You can put on as much of technology, but how can they sustain it? It's not that governments in any type of government is not sitting with no information. Actually, they are repositories of a lot of data. It's a different point whether the data is usable or not usable. But one of the reasons why they have not been able to sit through that and sort of remove the wheat from the chaff kind of thing for analysis is precisely because the capacity on a continuing basis has been very spotty. It is there, then it is not there. And one of the big challenges that I think these systems will face is really how do we get around to create not just buying technology or having access to technology, but to create capacity and capabilities to keep it going. Another reason is the institutional framework. You will be surprised that many states in many countries are not fully on top of their physical and financial assets that they really own. Now, this may surprise a lot of people, but that is the hard reality. And this, even if they know, they probably do not quite realize what the real market price, market value is, because there are all kinds of accounting issues or the way that it's been booked, because these are all legacy assets. So there is a journey there. And that is very much a question about institutionally who's in charge of these assets. That becomes a big problem from a sovereign point of view. And likewise is the whole issue about contingent liabilities, both implicit and explicit, on which information and data is extremely scarce. Now, I'm giving you the negative side perhaps, but I think that's not the point. The point is the challenge in some countries, and I'm not talking about 1, 2, 3, we're talking about at least 100 countries where these issues that I mentioned come up in one way or the other. But the hope is that it's not just blockchain or machine learning or AI or what have you, but it's really how they are going to be made portable given the idiosyncrasies of each system, given the institutional framework, and given the capacity to carry this through. So I see an opportunity, but I see a massive challenge. And I wonder what Anthony and others feel about what I've said.
Feel free to chime in, gentlemen. I would just to give a little background on what we're talking about here, how the sorts of systems that the report is talking about actually work. What we're essentially talking about is a blockchain-based system that can append smart contracts to allocations of budget that will restrict how it's spent, and for the recipients provide an architecture for them to report to the Central Budgetary Authority on how the money has been used, which, as I mentioned earlier, there's a lot of many central budgetary authorities are not clear on, beyond they've given a certain amount of money to a certain department, how the money is actually used is often not very clear. Mark, I'd like to come to you to maybe address what Udabir was saying. What are the sort of prerequisites for a country to make a system like this work? What do you need in terms of existing infrastructure, or can this kind of form that infrastructure itself?
Yeah, I mean, listen, the details are going to be just that, and so it depends a little bit on the underlying nature of the systems. But I think the point has been made by both Anthony and Udabir and yourself already, Lewis, that it is truly an outlying country that wouldn't have some sort of institutional framework and an underlying capacity to be able to discharge the accountabilities of the state, and that those typically are some sort of an ERP type system, a general accounting type system, right? That allows us to, from the what I call the public account view or the statutory responsibility view, they do allow us to track the way that budgets are allocated, and ultimately kind of ex post to report on the financial statements associated with the way that those budgets have been consumed. The challenge, though, that exists, and I don't think at all that this is restricted to any sort of a developing or some sort of an institutional lack of capacity context. I actually think that most governments around the world, if not all of them, if I could be that bold, share the same sort of challenge, and that is that the underlying systems that contain and track and manage the information that goes to say, hey, here's what the financial implication of a particular allocation and set of decisions and so forth are. This is the asset-based, this is the way that I track my assets. I've got a life cycle view that I want to do. Some of that is, all about engineering. Some of that is about fiscal accounting and reporting and so forth. I've got other systems that track, the cases that are being managed. I've got still other systems that are typically tracking the performance of the overall system. So Anthony mentioned, the importance of making sure that we're asking the right questions, that we actually have the right measures, and that they are somehow being collected in databases and so forth. The reality, long story short, is that I think most of our organizational systems around the world, those different stores of data are actually in different systems. And so the capability that we have to connect and essentially become an integrated view, because I may have an understanding of where the dollar went, but I don't have a very easy capacity to be able to understand that that dollar was consumed in this way by, say, some sort of an asset type system that led ultimately to this result, where that result is an economic impact, is a socioeconomic impact, is a poverty reduction impact, and so on. And again, so there's this combination of underlying systems that in some respects kind of prevent us from doing that type of integration being aligned to a pretty simple and powerful desire to make that integration actually come to fruition.
Yeah.
We think that the advent of blockchain technology in particular, but not exclusively, of course, right? I mean, there's a mix of technology and so forth. But one of the unique attributes of the way that these solutions can be designed is that we can actually achieve the integration without having to formally and in an infrastructure sort of level make the connections hardwired between the currently siloed and vertical is the way that these things are typically kind of conceived, the underlying systems. Trying to do that at the underlying system level, very, very expensive, very time consuming, fraught with risk, almost surely doomed to failure. But if I can get the result, generate the information that I'm looking for without having to actually do that, and instead come up with a different kind of solution mechanism that actually, to Udabir's point, I think enhances capacity, makes it much more sustainable because it's actually far less expensive to do it that way, and improves over time the quality of not just the underlying data, but the information that I can then feed to decision makers, such as parliamentarians and so forth, such as senior bureaucrats and so forth. Then I think we are in an environment that is far more powerful and has a much, much stronger probability of actually enhancing the public finance management outcomes that we're actually all desiring.
Thank you, Mark. Leslie, can I come to you next? I wanted to ask a little bit about, so the New Development Bank, you are a very experienced issuer of green bonds, which more so than I would imagine your conventional lending and the conventional lending from your, other institutions like yourselves, the supranationals, the MDBs, the green bonds will require a sort of higher level of impact reporting than the others. Can you, than the conventional lending? Can you talk a little bit about how the differences and how you do that currently?
Sure. Thank you very much. It's good to join this conversation. Let me just preface my comments first by talking a little bit about what I see or what we see in the development finance community as the potential of blockchain technology, and the ESG space is certainly one that I would like to sort of specifically shine a bright light on, because we are very, as you know, in green finance and sustainable finance. Maybe just to start out by saying that the development finance community, by that I mean, all of the development banks, World Bank, Asia Development Bank, Africa Development Bank, these institutions are more than 75 years old. And the business model that underpins how we function and what we do has pretty much remained quite standard over these decades. In many respects, there hasn't really been a major disruption yet about how we deliver and how we execute. There's something about blockchain technology, and IFC and the World Bank have led a lot of work in this regard. Most recently, the World Bank issued a bond on the blockchain. Just to remind you again, multilateral banks, we raise most of our funding, most of the capital that we deploy for infrastructure investments comes from the debt capital market. So we issue bonds on the back of our very high credit rating, which means that our cost of capital is quite low. And when we use that very high credit worthiness to on-lend to developing countries who, as you know, is much more poorly rated, so we raise money much cheaper than what they would be able to do themselves. And that model of how we raise money has been the same for decades and decades, right? We have financial intermediaries, banks who act as underwriters, and we issue bonds through very traditional means. Everything is paper-based. Our annual reporting, let's take the New Development Bank. You asked about our green bonds. New Development Bank, we issued our first bond as a green bond in 2016, July, for 3 billion RMB. And under that code, under which we issued it in the People's Republic of China, we have to report on the use of proceeds, right? So this is a very laborious paper-based process where, on all of the sustainable green projects that we invested the 3 billion renminbi on, we report on progress, etc. What blockchain technology offers is the ability to have much more efficient system where not just NDB, we could be reporting on, for example, the development impact in an entire region. Let's take the country where I'm from, South Africa. There are huge solar projects in, let's take the Northern Cape, which is one particular province. There's projects done by New Development Bank. There's others done by other banks. We could be reporting on development impact across, and not in a siloed manner as NDB or Development Bank of Southern Africa. So there's a way in which we will be able to enhance the efficiency of what we do when we deploy this technology. Preliminary steps have been taken, but the industry in general have been quite conservative, if you like. We're kind of used to what we do. We think we've done it well. And as they say, you don't fix with something if it ain't broke. But I think there is an opportunity now, which is why I look forward to, delving into this report to see what is the potential for blockchain technology in the whole domain of public finance and specifically development finance.
Yeah, it's a really exciting time in the whole area. I mean, the ESG finance movement, I think, has really catalyzed a lot of exciting developments here. I think just over the past 10 years, the way in which that market has exploded and really triggered, I guess, alongside a growing sense of the emergency around the climate, really triggered a sense that we have to do much better in overseeing how funds are used and making sure, and that's something that the report touches on quite a lot, making sure that that budgetary authorities have the visibility to assess how much of their spending is in alignment with. There is a whole variety of things it can be in alignment with, but the UN Sustainable Development Goals, net zero by 2050, a particular green bond framework or social bond framework. And this is kind of demanding a higher level of scrutiny than has previously been the case for that. So I think it's been, as you mentioned, Leslie, kind of catalyzed by the demands from investors. And we don't have an investor on the panel today, but something that they often talk to me about is, while an institution like Leslie's is providing impact reporting to them, they hold a number of assets from a number of different institutions, and they have no simple way of comparing the relative greenness of the assets. And partly that's an information management consideration, but there is also just differences of the metrics that people are using and a need for greater harmonization around that. And I think the sort of approach to creating a sort of overlayer that has visibility of a wide variety of data is very useful in that context. We're coming up to 1:30, so if any in the audience have particular questions for the panel, do feel free to send those in, and we shall address those. I wanted
on that last point, you may wanted to make a brief intervention, which is the following. MDBs each have their own development impact assessment metrics, right? Unfortunately, they are very siloed. IFC have their own, EBRD have their own, African Development Bank have their own. There has been a process which is now will culminate into much more standardized framework, because if you think about it, if we finance a big solar park in the Northern Cape in South Africa, it's very difficult to give one report around the impact if we co-finance it with AFDB or with the World Bank, and each one have different metrics. I'm not even referring to the standardized of regulatory frameworks, which is another domain where a lot of central banks and regulatory bodies have put out green finance frameworks, for example. So one of the urgent priorities now to move forward is to have that harmonization done.
Yeah.
I'd love to pick up on that. Sorry, Anthony, just two quick seconds, because that actually goes right to the heart of why these sorts of solutions have got so much potential, right? Because what you've just identified there can be addressed through some pretty cumbersome and pretty traditional older modeled kind of governance changes, right? Where you get these autonomous IFIs together and with very, very strong governance traditions and so forth. And then you have to agree on a set of standards, and then you have to agree. And I'm not saying that that's a bad thing to do at all, but that is a completely different approach to saying, but wait a minute, we're sharing in an investment. If I've got now the capability to essentially, to structure into a smart contract, the ability, the capability, the capacity to satisfy the ADB's reporting requirements, the new bank's reporting requirements, the World Bank's reporting requirements, all at the same time around the exact same set of conditions and so forth, why wouldn't I do that? You can have your original sort of governance cake and eat it too, and do it in a way that is not prohibitively expensive. And I think, in a really practical way, that's potentially the advent of this sort of technology. Anthony, sorry,
No, thanks.
So,
Mark. I thought I'd just respond to Udiba, because you asked the question around, what I thought in terms of institutional framework and the challenges around dealing with these.
Yeah.
When you make reference to explicit contingent liabilities, and in particular how we deal with guarantees. It is with the work of and assistance of the IMF. I don't know, Timothy Owen in particular, who worked with South Africa, and when we set up, when we changed our whole framework, where we initially focused on guarantees and a guarantee committee, we call it a guarantee certification committee, we realized that with the growing public-private partnerships and independent public-private producers, that there are also hidden risks in the public-private partnership program, and therefore we needed to deal with those guarantees that are there. And we then decided to not focus only on guarantees. We then changed the whole the committee that deals with these to the fiscal liability committee, because these were all fiscal risks. Now, what that means and what it illustrates is that if you look at the two programs, how we deal with in the same sector, Leslie made reference to the solar power projects in the Northern Cape. It's all in the energy sector. We have independent power producers that have come on board, not really because of the ESG requirement, which also helps, but it came on board in South Africa because of an energy problem, energy supply problem in South Africa, in order to boost the energy supply, in addition to what Eskom was able to provide. We have a IPP program providing a lot more information, because at the Treasury you are able to collect. Now, this is a block of data that is available to the Treasury from an independent power producer program that now also feeds into how the risk guarantee is assessed at the national level. So that to me is blockchain technology. And if you take the same sector, Eskom, a major supplier, what do we have in terms of information? You can compare the information available to Treasury between what you are able to get from Eskom, as an example, and what you're able to get from an independent power producer. The information is very different. The IPP program, a lot more granular. The risks, and it shows on the balance sheet, on the sovereign asset liability management, on the balance sheet, zero risk. It is absolutely no risk to the Treasury. If all investors would have no issue with the independent power producer program. You have an exposure. We recorded 200 billion rand, and that could be what, 10, $15 billion. That exists, but the risks are almost meaningless. Take Eskom. Eskom has got an exposure of 500 billion rand or more debt. It's a huge risk. It's the risk that is in fact driving the sovereign rating up or down, depending on where Eskom goes. It comes down to the block of data available to the Treasury in order to oversee the allocation of the public finance decision to give the guarantee. That's the
and
difference.
this is exactly the sort of thing that we're talking about here. I mean, the idea of a system like this is to give policymakers a much richer and more accessible source of data for policy formulation. I think that as we've kind of said already, a lot of the data already exists, but is not presented in an accessible form. And I think there's also the opportunity to gather a lot more data as well once the architecture for it is there. Sort of, if you build it, it will come type of thing. But what is then done with that data, I think, is a really interesting question. We touched on this in the report a little bit, and a previous piece of research commissioned by EY on the sort of economic savings that a system like this could provide was really interesting on this point. And they mentioned a framework, the marginal value of public funds, which is drawing on some research from some scholars in Harvard, I believe, in 2020, Hendren et al. And it's a really interesting framework for assessing the efficiency of public spending. So, theoretically, once you have all the data, you can allocate more to the high effectiveness, high impact projects than otherwise. That is intended to be, that's a system for comparing across the whole budget of a country, and that's one way of doing things. But I think more realistically, it will be at a departmental level or a project level for institutions like yours, Leslie. But yeah, this idea of providing richer data, more accessible data, leading to better choices, that I think only is a very exciting possibility, but it only really can be followed through on if we have the framework for assessing the value of spending. And I think all of you probably have worked on that sort of idea in different capacities. Adabir, any thoughts on that?
Yeah, I mean, no, this is an extremely rich discussion, and some of it is becoming broader than PFN. This last point, and I was thinking as you were speaking that one big driver behind exploring technology-based options is coming from the fact that a lot of money has been raised and put to work on infrastructure development in many countries. And it is coming at a time when a lot of financing will be needed for climate mitigation, so climate adaptation. So the question coming up is that what has been the experience on infrastructure development of the money that has been raised? And can technology give us better answers to those questions about impact of policy on infrastructure development? How it impacted the economic activity? Did we get back revenue from it? Over time, the investment made, has it given social returns that we expected? Were our simulations and estimations right? So there is a lot of sort of that type of anxiety building up now that can be put this to use. I don't know, and I think this question will keep on coming up as we are going to be raising another pool of money over the next 10, 20, 30 years on SDGs and on climate and what have you. So the question is, and this I wanted to ask Mark, that what has not been clear to me, I have never set up any blogs, so I don't know or link them up, but just help me to understand that it's fine to share data or connect data through these blocks, chain them up. But from an economist's point of view, from a policymaker's point of view, when I can put it to use for my policymaking simulations, forecasts, estimations, right? Then I think it makes a lot more sense, because then that becomes a check and balance on whatever blocks we are creating. That has never been clear to me, that will this allow that type of analysis that is needed for accountability, for good disclosure, for transparency and for policy calibration. So the benefit of just collecting and linking it up is absolutely great. And I think, Mark, you've explained it so well. And I'm trying to take it beyond that, that from a policy point of view, how will this really go into that zone or not? So I some remarks and one question, which I think is not a non-trivial one from a practitioner's point of view.
Well, not at all. And in fact, that is the perfect summary of why, we and my colleagues and so forth actually got into this in the first place, because that is right at the heart of it. It is not just, this is not a reporting or a compliance exercise. I mean, it can have that benefit as well, that we can be more administratively efficient, then that's a great thing, right? But it is actually to the heart of what you've just said, that I don't want to connect data sources together just for the sake of it. What I'm actually looking to do is I'm looking to understand essentially the transaction value of when I have taken $1 of public money and I have invested it in a particular way for a particular purpose. That then, I mean, you mentioned economists, but policy science and so forth, that really is the crux of what this is. Now, how does the technology allow us to potentially address that in a different way? It is through the power of the smart contract capability, right? Because it is not just I've got some notional understanding that this budget went to that organization that ultimately led to some long-term satisfaction of a sustainability development goal. It is much more that this dollar had this result, and I can measure that against the framework that might be, what is the marginal value? Lewis made mention of this, right? There are academics out there that have come up with ways to say that, wait a minute, the marginal value, the utility of this dollar invested in this type of program is higher than that same dollar invested in an alternative program. And I do think that while it's very, very early days, that is the ultimate objective. And if we bring it back to the kind of the ESG world, the green bond, the social bond world, and so on, this is capital seeking two purposes, right? One of them is the financial return, which is very traditional, and we've got lots and lots of experience in that. But it is that investment led to this additional societal impact, whether that's a climate impact, whether that's a social impact, and so on. And that really is the capability that is trying to be created here. Yeah. So that investors, that institutions, they understand the marginal value of one type of investment in one type of scheme versus another. That is totally game-changing from the perspective of highest and best use of scarce resources.
I would fully be with you, Mark, on that. I hope one day we can get there for all systems. Sorry,
I just want to jump in. We've got a few questions coming in from the audience. Thank you. Please continue to send those in. I'm about to ask them. Just wanted to remind the audience members, there is a poll question that you can see as well, which I think we'll get the results on shortly. So please do answer that. So if I can, we've got a couple of questions in here. I just wanted to, well, one is, how do you see the application of blockchain supporting the rollout of investments in Africa? I think it's a really interesting question. There is one, before I pass it to the panelists, one thing I'd like to mention related to what Mark said, and that is that a system like this, delivering better transparency and accountability anywhere in the world, not restricted to Africa, but for anywhere where money is being lent, a system that provides surety of how the money is going to be used and transparency of how the money is going to be used is extremely valuable, particularly to ESG investors. One of the things that they're paying for is confidence that money is going to be used in the way that they're expecting it to be used, and a system that provides a means of checking that and enforcing it is could quite easily command an improvement in the cost of funds for projects like that. So that's a general point, not specific to Africa. Possibly Leslie and Anthony would have points on how you see the technology being applied elsewhere.
Can I just make the point? What to me is important, Mark, and in how you look at the investment. To go back to the definition of public finance, that's important because I can take, there are lots of literature on public finance, and I'm just looking at the Bailey 2004 on public finance, and there are some core, and I'll read it what public finance is, the definition. It's any revenue and expenditure. So it's important that you look both at the revenue and the expenditure, and then that flows. So it must be a flow, which means there must be an outcome. It must be a dynamic process. It's not a stock. Through government budgets, reflecting a multidisciplinary, constitutional relationship. So you must remember the Constitution. South Africa is a constitutional democracy. How you deal with and manage public finance must the mandate you get it from the Constitution. Relationship between the state and its citizens. That's an important relationship, dominated by the political philosophy existing in that country. That's the definition. So it's important that we don't look at this just in terms of efficiency and the spending. It is also the revenue and the income, and therefore the entire landscape of public finance, and therefore the emphasis on a sovereign and a dynamic, I would argue, sovereign asset liability management framework, where when you spend on the liability side, you are able to see the revenue grow on the asset side, so that you then are able to see the credit worthiness that Leslie spoke about, and the net worth position improve on the balance sheet, which is then the outcome you'd want to have that benefits society at large. That is the dynamic approach. I don't think current adoption of public finance deals with this dynamic approach. It's about a portfolio that, well, we do, and how do we manage the risks in a portfolio of debt? How do we manage the risks in a portfolio of guarantees, which is also good, but it's not enough. We just need to take it a step and say that that same portfolio is also capable of generating revenue on the asset side of the sovereign balance sheet.
Maybe just to say something about Lewis, about the question on Africa. Let me just start off by saying that the application of blockchain is not a theoretical construct. There are current applications of blockchain, very successful ones in the sort of payment systems, as you know. Let me take one step back and just say that if you want to deal with global inequality and deal with the incidence of extreme poverty in the world, Africa is projected by the World Bank by 2030 that 60% of those living in extreme poverty will in fact be in Africa. And what makes it even more complex, a large number of those people will be living in what is called fragile and conflict states, which means that you have to look at non-traditional means to deal with the development challenge. Let's just take the one big element of dealing with global inequality, which is financial inclusion. Large numbers of Africa, of people still in the world, do not have access to a formal bank account. Blockchain technology have a critical role to play in providing that ability for people to leapfrog. Forget about working on solutions that are just focused on late applications of technology. But what these blockchain payment mechanisms have done is, for example, to disintermediate these very expensive intermediaries that charge 2, 3, and 4, and some guys much higher percent commissions. So there are current entities that are supported by the IFC in the World Bank in Kenya and a number of other places where blockchain technology have been used to disintermediate these players. The second key point that I'd like to make, remittances is only one element thereof. There are many countries that are very dependent on remittances, and what the World Bank and others are looking at now is to try and sort of replicate these technologies so that it is not just focused on one particular delivery mechanism. So in short, blockchain will play a very critical role to help African continent to leapfrog the current technologies that exist.
Fantastic. Thank you, Leslie and Anthony. Let me just give you guys another question from the audience. Well, this is probably mostly for Mark. Can you talk about who the stakeholders would be, who would be participating nodes in the public finance management blockchain, and what processes will be onboarded onto the blockchain?
All right, coming off of mute there. Well, I mean, the first thing I would say is that the underlying does not come onto the blockchain. It is essentially a record of the transaction and so forth. So anyway, that's a bit of a technical thing. And let me try and answer that question through an extension of what Leslie basically just said, which is that let's take a very generic and broadly defined development objective, poverty reduction, say, as the case example, and then let's just think about the current state, and let's just think then about the future state. So the current state might look something like this. Somewhere way back at the front end of a supply chain, of an execution chain, you have an originating funder. Let's say there's a donation that comes from the EU, and it goes to one of the development banks. The development bank then enters into an agreement with a country public financial management system that then gets down to a departmental level, that then gets down to a program level, that then gets out into a supply chain. We start to build and invest in an infrastructure project or a public health project or an education project and so on. And ultimately, we're actually able to connect all the way down to the individual or community-based beneficiaries. In today's world, what we have is just an incredible number of very cumbersome trade-offs along that chain. And it's not just about the way that the money flows, it's that people are adding from different pools of money, perhaps, and they're also, as we spoke about earlier, adding different components of intention, different expectations around accountability, different expectations around the results that are actually intended to be achieved. And in today's world, there is almost no way to manage that, which is a fairly simple thing that we would like to be able to do. There's almost no way to manage that other than by using paper and a lot of ex post reporting. In a solution-based environment like we're talking about, you can actually structure right from the beginning all the way down to the beneficiary end the important nature of the connection between the investment made, the activities enhanced, and the results achieved. And if you so choose, if you design it this way, you certainly will not impede the starting autonomy of any of those actors. And in fact, you can enhance it, particularly when we get down to the, to the community level, down to the individual level. And it sounds almost too good to be true, but as Leslie says, this is exactly what is emerging right now in real time, practical, in implementation. And the power of it is so astounding that, we need to bring it to the, light needs to be shed on just the range of possibilities that we can collectively achieve as a result.
Yeah, fantastic. And I think it's worth highlighting as remarkable as some of the potential seems, this is a level of scrutiny that is increasingly going to be demanded of public institutions. ESG has been, among the catalysts for that, but it is going to be demanded throughout the economy. We are running short of time, and I would like to, well, actually, we've got our poll results just in, so I'm going to read those out, and then I'll give you all a chance to sign off with any final messages. So the poll question was, what do you see as the key potential benefit to your organization of adopting a blockchain-based approach to managing public finances? So 53% said greater transparency into spending flows. I think no surprise there that that's the majority. Improved information on outputs and outcomes of spend, reduced costs of 17%, 17% also for reduced costs of financial reporting and auditing, and 13% on improved spending efficiency. I think the improved spending efficiency is something we've talked about a lot, and it is, I think something that I see as a potential outcome, but as we've mentioned a couple of times on this panel, there are various other components that need to be satisfied to deliver that. But I think, so perhaps what we're saying is a blockchain-based system for public finance management is not a sufficient condition for that, but possibly a necessary one, or at least some way of improving that kind of oversight. So yeah, some really interesting results there. I'll just run around you guys quickly to give you a chance to sign off. Udebir, would you like to go first?
Well, I think this, two points from my side. One is, from my experience in we haven't mentioned about debt management, debt markets, investors, rating agencies. There's a whole a universe that is going to welcome for countries and systems that start moving in this direction, unquestionably. And I'm convinced that over time, we will see that gets reflected in the spreads and the premium that is being charged from some of the sovereigns or states who want to borrow. So that's one thing, that link or the benefit, not just for simulations and forecasts, but also for going into the market and getting themselves evaluated. There's a benefit to that. And the second quick point is that, look, we should be a little humble in bringing the technology as into the whole mix. Absolutely, we must. But the impression ought not to be that its adoption will lead to, or rather it's a panacea for bad policies and poor implementation. It can't be. I mean, it's just an instrument or a tool. And I think its adoption should be viewed by country authorities or others in that spirit. Thanks.
Thank you, Udebir. Leslie?
Thank you very much. We are very excited as New Development Bank and the MDB community in general. I think the key point here is that this is not about blockchain and advancing blockchain. It's about how to use this breakthrough technology to achieve the objectives of reducing global inequality, to enhance development impact, and do what we have been tasked to do by our shareholders. All of the MDBs are focused now on how do we accelerate the drive towards net zero. So it's about how can we, in the most effective way, raise more capital, mobilize the private sector to deepen the sort of green agenda. Blockchain is really just an instrument. It's a breakthrough technology that empowers and enables us to do that in a much more efficient manner. So this is a very exciting report that you have just launched, and I'm sure it will propel and catalyze more analysis and research within the development finance community about how we can improve our delivery mechanisms.
Thank you, Leslie. Just on the topic of the report, I should mention you can find it on the website, on OMFIF's website. And just wanted to highlight, we're not stopping here. We have this report, this launch event, but we have a program of podcasts and other events coming up as well, exploring this topic and some of the applications in a bit more detail. And there'll be a subsequent report at the end of that over the course of the next year, summarizing our findings from these meetings. There's certainly been a lot of findings today, a lot of interesting angles that I hadn't considered. Anthony? Anything you wanted to say?
Thank you, Russ. Yeah, just to add on to what Leslie was saying, as an instrument, absolutely. The Constitution of South Africa in relation to public finance, the Constitution in the Bill of Rights says that the state is responsible to ensure that citizens have access to their socio-economic rights. And I'm making that very clear point about socio-economic rights. And in this regard, the state must fulfill, and I would link that to the equity part in public finance management. The state must promote, and I would link that to the efficiency part in public finance management. The state must protect, And I would link that to the effectiveness part in public finance management, and the state must respect. This is in the Constitution, and I'd link that to the economy, the net worth, the creditworthiness, the actual outcome, and the impact. Blockchain technology is capable of making that alignment in order to benefit, ultimately, citizens at large. Thank you.
Thank you, Anthony. Mark, I've given everyone else the chance to say whatever they want, but there are more specific questions that the audience has asked you, so I'm afraid I'm going to put you on the spot there a little bit. An attendee from the European Parliament has asked if you have a concrete example of this in use, you know, name, budget collaborators, etc. I don't know how much you can say on that point, and we have another question about if you can talk about how blockchain for PFM can potentially help reduce leakage and corruption in public procurement. So if you can, over the next minute or so.
I mean, really quickly, and I think in a very public forum like this, I won't name names, but I will suggest that the answer, by the way, to both of those questions is yes. And as the conversation has actually this morning demonstrated, you know, if you're talking about the largest, you know, financial institutions, development-oriented financial institutions in the world, who are seeking to I think in Udabir's voice, you know, a humble early stage, but still ambitious and forward-thinking approach to understanding how this technology can be applied. Yes, there are many very powerful examples that are dealing with the various dimensions of the challenge that we have spoken about this morning. And so perhaps, I mean, whatever, offline, we can talk about more specifics. In terms of just a wrap, I actually will just start or finish where I started and just say that, you know, I can't imagine that we even anticipated that the conversation this morning would be as rich and I think as productive and in a very positive way, giving us all, I think, more confidence and perhaps even more permission to try and drive where we started, which is, this is a hypothesis that is emerging. There is this technology. There are these very long-standing, perhaps even constitutionally defined, as Anthony has laid out, requirements. If we don't get at this, then I don't think we're actually satisfying our responsibilities as professionals, as citizens, as people who are committed to the cause here. So I just say thank you, and then Lewis, to you and the team. I know the level of work that you've done, and just thank you very much for putting this into the public domain.
Our pleasure. It's been an absolutely fascinating topic. I'd like to thank you, Mark, and Leslie, who's had to sign off, and Anthony and Udabir for joining today. It's been a fantastic discussion. I've certainly learned a lot, and this is why we were keen to do this. The subsequent report at the end of this at the end of the year. Well, it'll be mid 2023. We'll be doing a subsequent report on the findings from the discussions we have on these, because I think so many people have so much to contribute on this, and it is very much a work in progress, and it's been very exciting to be part of that. So thank you all. Thank you to my panelists today. Thank you to the audience for signing in. I'll sign off here. Thanks very much, and do check out the website to find the report and notifications about subsequent events. Thanks a lot. Goodbye.
Thank you. Thank you very much.
Thank you. Thank you.